Welcome to The Explainer. Today, we're breaking down a detailed professional analysis of ARM Holdings, one of the most talked about companies right at the center of the whole AI revolution.
Now, you might not know ARM by name, but I guarantee you know their work. For decades, their intellectual property has been the silent engine inside practically every smartphone on the planet.
But the story is shifting, and it's shifting fast. The company that defined the mobile era is now making this historic pivot to become the essential architect for the entire infrastructure of artificial intelligence.
Okay, so here's how we're going to break this all down. We'll start by looking at ARM's recent transformation into an AI powerhouse. Then, we'll dive into the powerful bull case, followed by the significant headwinds it's facing. And finally, we'll walk through an expert's playbook for how to approach this stock.
First up, let's get a handle on the recent developments that have completely reshaped how the market sees ARM, putting it right at the heart of the AI conversation. The market is definitely moving fast. You've got investment banks like Mizuho dramatically upping their price targets, seeing huge potential. Tech giants like IBM are forming these strategic partnerships, which is a huge deal, by the way, bringing ARM's architecture into mission-critical systems. And of course, you follow the money. Big institutional investors are massively increasing their positions. The narrative is clear. ARM is now being seen as a fundamental building block for AI.
So, let's get into that bull case and see how this new identity is translating into some powerful financial performance and a really compelling story for future market dominance.
Okay, now what's really fascinating here isn't just the impressive revenue growth, which is up over 26%, but the quality of that growth. Both royalty and license revenues are just soaring, and would you look at that gross margin, 97.6%. That's the incredible power of their software-centric intellectual property model.
And this chart right here, this is really the core of the whole bull argument. While the entire business is growing fast, that revenue from data center royalties, it's just exploding. We're talking over 100% growth in a single year. This is the new engine of the company, and it is just getting started.
So what's fueling this royalty boom? It's something called ARM v9. This is the company's newest chip architecture, built specifically for AI. And here's the crucial point for investors. For every single chip a partner sells using this new v9, ARM gets paid nearly double what it got for the last generation. It's basically a built-in profit multiplier.
But ARM isn't just upgrading its old model. They're going through a historic transformation. For 35 years, their entire business was to sell blueprints. Now, for the first time, they're getting ready to sell the engine itself, designing and selling their own physical chips directly to data centers. This is a massive strategic shift.
And this new chip is designed to solve a very, very expensive problem. In AI data centers, you've got these incredibly powerful GPUs that often just sit idle, basically waiting for the CPU to organize tasks and feed them data. That slowdown is the orchestration bottleneck, and ARM's new chip is custom-built to get rid of it, unlocking the full power of all that expensive hardware.
Of course, it is not all clear skies. The expert analysis is also very clear about the significant risks and headwinds facing the company. So, let's pivot to the bear case.
The very first thing any skeptic is going to point to is the valuation. With a price-to-earnings ratio of nearly $200, the stock is, well, it's priced for perfection. This means the market is already assuming massive future growth, leaving absolutely no room for error or disappointment. Next up is a major competitive threat from a completely different kind of business model, RISC-V. This is an open-source architecture. That means anyone can use it to design chips without paying ARM a single dollar in royalties. It's the free alternative to ARM's whole ecosystem. And this is not just some theoretical threat on the horizon. It is happening right now. This analysis highlights that RISC-V is already actively eating into ARM's market share, particularly in the critical Chinese market. And that brings us to the geopolitical risk. As this chart shows, about a full 25% of ARM's entire revenue comes from China. This heavy dependence makes the company extremely vulnerable to the ongoing trade tensions and tech restrictions between the US and China.
So you've got an incredible bull case on one side and a set of very serious risks on the other. How does a professional analyst put this all together and create an actual, actionable investment strategy?
The playbook laid out in the research is pretty methodical. It identifies a primary entry zone right around the current price, but then it sets a strong buy zone between $123 and $130, basically advising investors to use any major market fear to build a position.
On the upside, it marks a zone to take some profits, with a long-term target that lines up with that bullish analysis. And crucially, it defines a clear stop-loss level to manage risk if the whole thesis breaks down.
Ultimately, the analysis concludes by zooming way out. The core idea is that investors should look past the short-term noise. The real story here is that ARM is evolving from a chip designer into a foundational infrastructure company, providing the, quote, digital soil where the entire AI ecosystem is going to grow.
And this leaves us with the essential question for any potential investor. There's no doubt ARMS is a central player in architecting our AI future. The real debate is about what that future is worth today. Faced with this incredible potential, but also significant risks and that sky-high valuation, what price are you willing to pay?